About 25 minutes, lots of insights to unpack, so I'm going to dive straight into it with a quick intro one-liner from everyone on the team. I think you already know all four protocols that are with us here today. Clayton?
Babylon's a Bitcoin staking security protocol.
Hi, I'm Sue. I lead APAC at Eigen Foundation. EigenLayer, as we all know, we coined the term of restaking, focusing on providing shared security for AVSs, all the builders in the space.
I'm Kratik at Renzo. At Renzo, we're a platform for easy restaking, and we're building LRTs on top of existing restaking protocols like Eigenlayer.
I'm Ken. I lead our institutional business at Pendle. Pendle is a marketplace for fixed rates and yield/points trading for different types of assets, including ETH restaking assets.
Love it. I prepared probably way too serious things, but I want to make sure I don't piss off any of your legal teams. But I think the first thing that was really important, I think for me as a DeFi fan, is a lot of the capital efficiency side of things. I think each of you guys have been doing stuff in different ways to improve that, and I think we'll tie this to some of the institutional side of things and liquid funds that I'm sure you guys have been getting hit up by all the time. But I'd love to hear a little bit more if anyone wants to chime in on how you guys see capital efficiency improving over time within the space. Any order is fine.
Yeah, I mean, I think for us, we don't really care about it at all because we're only focusing on Bitcoin, and the majority of that is not sitting any place at the staking layer or in DeFi at scale, right? So I would say like around like 1% to 2% of Bitcoin is on decentralized rails, whether it be like on Babylon or some other staking layer or some other DeFi protocol. So I don't think we really hit the threshold of like knowing the needs for efficiency, like the unlocking of the Bitcoin and putting that into markets is what we're focusing on right now.
Cool. So effectively tokenization.
Smart
tokenization
through our LST issuers. So like we are just like the control plane that is allowing this Bitcoin to be locked natively on the Bitcoin network, and then what people want to do with that, whether they want to provide security to other protocols or issue an LST on top of that, they can. But yeah, we only have about like 2 billion now, so that's like 0.12% of Bitcoin circulating. So I don't think we really need to think about the efficiencies at this point.
Sue, maybe on the ABS side?
Yeah, I think for us, the design of our protocol, I think similar to Clayton's comment, we don't really, capital efficiency, I suppose, if you look at from an ETH angle, like, before it was just ETH staking, now we kind of allow them to restake, so staker have additional yield. From that perspective, there's level of capital efficiency. But if you're talking about the current existing stakers on our platform, a lot of the capital efficiency, or like you're really trying to do something that's more DeFi, then it's not really for us to do, because we really are just building a marketplace for people to provide the e-security to AVSs. I think a lot of the other kind of more fun DeFi use case comes from some of the LRT players in the space. So I feel like probably Renzo team has some interesting ideas on that front.
Yeah, we care a lot about capital efficiency. That's the biggest demand from users. So the way we are designed is we have two pools. One, the majority of the pool is the one that's responsible for capital efficiency. This is the pool that secures AVSs. And then there's another reserve pool, also called the buffer contract, to facilitate fast withdrawals or lower time withdrawals when users want to convert ETH back to ETH. So the way we are structured is we optimize for capital efficiency. More than 95% of the ETH within Easy ETH is restaked and securing AVSs, including EigenDA and AllClear. Even the rewards that we generate, all the ETH is again restaked to maximize capital efficiency, because that's the name of the game, right? And the fact that we have $1.6 billion, which also means that there is ample room for withdrawals. There's 75 mil that is available for fast withdrawals. And by fast, it's like 3 days, it's not instant. but the capital efficiency um, is the real deal for LRTs. Going forward, I think it might take a different turn as new AVSs with new requirements start spinning up. So we'll see how that will progress.
Yeah, and maybe Ken on the V3 side, maybe some points to show now.
Yeah, maybe before I get into that, Pendle itself at the moment is not capital efficient in the sense that the positions are fully collateralized one-to-one to underlying asset. But how we typically approach capital efficiency is through third-party integrations, say with money markets, who would then take, let's say, a PT asset from Pendle and allow you to borrow against that. PTs obviously have very clear price performance as they converge to par towards maturity. That makes it great properties for collateral. And then on a new product perspective, we just launched a few days ago. We announced that we're launching a Boros, which is a futures-based form of trading yield that we're excited to launch in the coming months or so. That is will have some element of leverage and therefore will be tackling capital efficiency on the rates trading space.
Love it. I think related to this point, especially with regards to the capital efficiency, I think on the flip side of that is some of the liquidity that we see in on-chain worlds. As the ex-Binance guy in the world that maybe wants to disrupt centralized exchanges, don't tell anyone I said that. Would love to hear a little bit more from you guys on how you guys are looking at building up more of the on-chain liquidity, especially given that you guys have a lot of access to large funds and other players that are willing to step in. You guys are often seen as some of the safest yield in the space. So would love to hear a little bit more from you guys.
Yeah, so as far as EZ is concerned, we recently launched incentivized vaults with RE7, Enzyme, and Kian protocol. So these are, you can think of them as automated asset managers in the sense that you deposit either STs with them and they provide very deep liquidity right below the market price. So that becomes like a backstop for instant ETH to ETH swaps. The thing is, as the price of ETH also moves, which it wasn't the case when there was all the points mania speculation time, but like right now ETH constantly moves with time. So these managers also make sure, these vaults also make sure that these ticks dynamically improve over time as the prices increase with respect to ETH. So that's most of what it is. And recently we launched on Camino on Solana. It's also a new small incentivized tool for on-chain liquidity on Solana as well.
Yeah, I mean, I think the biggest opportunity, if looking at getting more volume on decentralized exchanges, is unlocking the Bitcoin. I mean, like most of that activity sits on centralized exchanges, where you see like the graphs going up and slowly to the right for pretty much any other token, and that's because like the Bitcoin network isn't super usable, right? It's store of value, it's send receive. But once you are able to maybe not even go through a third-party issuer like a WBTC or a CBBTC, then there will be like more trust in those decentralized markets, whether they be on a layer 2 on Bitcoin or some other place, and bridging that asset over. Staking allows, at least in the current form on Babylon, LSTs to be issued. Those are obviously controlled by people like managing the custody of the Bitcoin, et cetera. But ultimately our protocol leads to the future opportunity, which is like trustless liquid staking. So you can still be in custody of your Bitcoin, you can move it over to other places. And so the opportunity size for that, if someone's looking to build a DEX, is like incredible.
Kratik or Ken? Anything else?
On liquidity, I think we probably take a different approach. So if you look at thinking about liquidity, typically people look at spot prices and how much depth there is on DEXs, let's say on Uniswap or on Curve. I think the way that we look at it at Pendle is that we are, in a way, attracting liquidity. Instead of trading spot prices, people with interesting fixed rate and yield markets, let's say on ETH or any similar type of asset, that could potentially bring in new liquidity as they get attracted to those fixed rates. So we would be, in a way, facilitating liquidity on underlying assets, but from a rate trading perspective instead of just spot. So a different dimension to think about it.
Love it. I guess the next thing is obviously a lot of people are using you guys in a lot of unique ways, and I think for some of the builders in the room or other people with a lot of product users for their products, kind of curious to see if you want to highlight any interesting integrations or use cases of some of the composability that each of your protocols help enable.
Yeah, for us, we have a very long-term focus on all the AVS ecosystem. So AVS, active validated service, but you can understand it as any protocol that needs a node or needs some sort of validation on chain that could be part of our ecosystem. Recently, I think a lot of our existing partners, so for example, Outlayer today also announced that they have this new platform for people to easily launch like a AI agent. So AI agent is a very hot topic in the space right now. I think a lot of the meme coin was made by AI agent. So for us, we have seen some of the existing teams start to build more kind of AI adjacent products. So AI agent being part of it, I think today Gearbox is also building like a decentralized AI agent that could be an ABS on Eigenlayer. So I think when people talk about AI agent, before it was all like virtual girlfriend, boyfriend, you chat with a little guy, cartoon, anime. But essentially it's a kind of an AI that could take your command and understand what you want and to do certain actions. So that is kind of one of the latest innovation that we've seen in the AVS ecosystem. But outside of that, we're also seeing some protocols building like zk-TLS related stuff, so that's also very interesting. So Opacity, for example, is doing that. So really, I think a lot of our AVS teams are trying to create something new in the space. So even though that some of them might be already very well established, like Outlayer right now, they're coming up with like new ideas, and some of the newer team are bringing different kind of innovation to our ecosystem as well. So those are kind of two, zk-TLS and AI agents are the latest one that I want to highlight. But bridges, oracles have been around for longer. Those are always like a use case that makes sense for us too.
I think outside of the folks that are building on top of us, I think the interesting thing, because there's always this like speculative thought of like, what are people going to do anything with their Bitcoin? And there's like a camp where there's like absolutely fucking not, and then there was a camp where like, well, maybe, and our staking window has been open for like 2 hours ultimately, and there's $2 billion staked via Babylon now. So I think we've like gotten to a point where a lot of people do agree that Bitcoin can be used as a stakeable asset. And to put it in perspective, like there's a line to get into Ethereum. There's an exit queue as well. There's theoretically no line to stake Bitcoin if we decide to open up the window again. And there's no exit queue at all. So it would be just a 7-day unbonding period. So, especially for institutions, right? If like, thinking about like, ETFs in the future, right? Like that exit window is known and will be the same for everyone. So, yeah, I think we've proved interest, which is, the first initial use case since we're not live yet.
On the the hackathon that you guys had this week, anything you want to shout out from this one?
So someone's building a restaking solution on Bitcoin on Babylon called SatLayer, which is interesting. So you can also now leverage LSTs and then restake them on Babylon through SatLayer to secure middleware services as well. We had a few chains. So basically, Babylon in its current form right now only secures execution layer environments. So Arbitrum Orbit chains, OP stack chains, as well as Cosmos SDK chains. Our ultimate plan is to go horizontal and only do that and allow people to build services on top of that as well. So we had about like 80 developers and like 36 teams, but yeah, it was a good turnout.
Awesome. Kratik, anything on EasyETH or any other products you guys have?
Yeah, so as AVS has started going live, we are moving into deeper integrations with the Eigenlayer AVSs that we're securing. So, for example, enabling native ETH restaking on alt layer rollups, using Hyperlane interoperability, sorry, technology, and using Lagrange's ZK proof tech for proving on-chain emissions for liquidity providers to improve on-chain liquidity. But the calculations of these emissions have usually traditionally been mostly done off-chain. So to bring that on-chain or verify those off-chain computations on-chain, we're using the Lagrange proving tech. And as more AVSs start going live, eOracle has been super instrumental for easy pricing on alt new rollups, for example. So this includes like a more aligned, I want to say symbiotic relationship, but that would be like kind of a not the best word to use, but yeah, basically a symbiotic relationship between different factions of the restaking ecosystem. Mutually beneficial, yeah, mutually fruitful relationships that we're building. And so, yeah, I think there is a long enough. I do see a future where we have a ecosystem that all support each other, so that we find organic use cases, and demonstrate demonstrate the use cases of restaking and the power that restaking has to users at a much cheaper cost. So definitely something that I'm looking forward to. And very recently we launched Easy Soul that was very much high in demand on Solana. So even though we had conservative caps, it was hit pretty quickly, and we're looking to raise the caps again in the next few weeks. So there's some alpha there if any of you hold Soul. So yeah, that's about it.
Yeah, less on the restaking stuff, but I think some interesting use cases I alluded to earlier on using PTs, Pendle PTs as collateral on money markets. We've also seen PTs used as collateral for option vaults. So DataNuts did a PT-based vault not too long ago. And we're also seeing off-chain adoption for PTs. So OTC desks are taking PT assets as collateral to either provide loans or write options against. So that is one big thing that we're focused on as an interesting use case. Some other use cases that are a bit more specialized and niche would be generating essentially a fixed rate loan on say Aave, where you can use the YTs of AUSDC, which we have a pool, to secure the spread between to secure the loan spread. And I think creating a synthetic fixed rate loan through Pendle is one interesting use case that is quite not too common, but we've seen some use case. As well as there's a protocol called Index Coop. They have a high yield ETH product. Basically, it's like a ETF, so to speak, that has multiple different underlying assets. In this case, all ETH derivatives. They do have a bunch of PT assets where they derive the yields from. So yeah, multiple use cases, and we're always looking to expand what we call the Pendle ecosystem or Penco system, different ways to use Pendle assets in DeFi.
Love it. So I think we don't have much time, so just one last phrase to give a 2025 prediction, not price, NFA, but just some sort of trend or sector that you see related to some of your protocols. In the meantime, while you guys think on this, I do think that overall, part of the reason why I think we're quite excited is that we do think that DeFi overall will make a comeback. I know we've been distracted with memes, distracted with a lot of other stuff, but I think fundamentally some of the cool stuff that you guys have been building is a backbone of yield for the space. The real world has reference rates, bank overnight borrow rates, all these types of safest levels are building blocks of yield. And in crypto, for better or for worse, we sometimes get too distracted with 1000% APYs and GMs in our messages. And I think sometimes I need to ground myself to see some of the stats that you guys are working on to create that safest layer. So at Impossible, we've been working on and still incubating a lot of DeFi stuff perpetually, even when the spotlight's not on DeFi. And I think that's why a lot of the market also respects you guys for keeping their heads down and still building all these fundamental blocks, when it could be very easy to put a couple Pepes on Twitter and call it a day. So yeah, with that, maybe one word starting from Clayton.
I'll say a little more than one, but I mean, I wish I could announce more of our partners on the chain side of things, but we did make an announcement last month with this very fun, degenerate, but very buttoned-up protocol called Corn, which is a DeFi hub, being built on Arbitrum stack. But I think what we're trying to do is paint like a new picture around what can you do with Bitcoin as a store of value, and it going beyond just the base layer. And I think there's like three things that like we focus on, right? We think that developers want sovereignty in the sense of like being able to settle wherever they want. People want throughput and speed of transaction execution. And people want a store of value within their ecosystem. And so we believe that Bitcoin is a store of value, the best store of value asset in the world that goes beyond like digital rails and the security that we can provide and the liquidity that we can offer to the chains or the folks that we're engaging with the most. So hopefully can share more later this quarter, but definitely next quarter as well.
For us, so obviously for EigenLayer, we're here for the builders, and we've seen a lot of ABS that's been built right now that's more infra focused. But I think for next year, we're going to see the focus shifting more and more to consumer side. dApps Builder will be a focus, so DeFi being part of that as well, because it's directly facing the end users. So I think that will be a big focus for everyone. So quite bullish on any kind of new consumer case, and we have enabled quite a lot of them on the infra side. The other part, I think it's kind of like just broadly speaking, I feel like stablecoin or RWA related theme's gonna come back again, because as you know, like when market pick up, like every year, like every cycle, it's just like more TradFi people thinking, how do I get access to like crypto, like what kind of innovation that could happen, and we've seen that stablecoin has been kind of one use case that's being adopted by a lot of the TradFi player already. So I think we'll see more innovation coming from the RWA side as well. Yeah.
Yeah, I mean, I think 1 year is like 10 years in crypto, so it's like even hard to predict what's going to happen in a year. But as far as, I mean, plus one on the consumerism side, and or rather like consumer level traction on that note, like I think what's going to happen very soon is we're going to see a full cycle of user onboarding and offboarding directly from rollups, and basically like sovereign execution environments need not even be EVM for that matter. So imagine like if you could restake from a rollup, which is already possible, but then also harvest rewards, withdraw from that rollup, use your apps that are already integrated with that rollup. So you never ever have to even think about what's happening on the back end, and you get a full cycle of user experience while always being on a rollup. You never have to worry about slippage while going cross-chain and things like that. So I think we're moving in that direction, but I think it's going to pick up very soon because now the incentives are allowing builders to build more consumer-friendly apps. So far, they were more aligned towards building infrastructure that enables these apps, but now we're soon going to see a lot more traction over there.
I think the great thing about innovations like restaking is that for assets like ETH, you get enhanced yields on that. And on assets like Bitcoin, obviously, we're typically not yielding anything. Now it's potentially going to be generating something. And as we get into this part of the cycle where we're getting more and more yields or APYs in DeFi and in crypto, that's obviously great for us because we create markets for yield trading, and we want people to trade and speculate on different types of fixed rate and floating rates. And to your point earlier, definitely we're lacking a lot of the yield infrastructure when it comes to comparing, let's say, DeFi to things like different types of different durations of treasuries in TradFi, for example. There's definitely a lack of term structure in DeFi rates and also beyond DeFi, right? Like you think about funding rates on perp exchanges, you think about potentially RWA rates within crypto. There's still so much that we can do, and we personally think that the TAM is huge for us, and we hope to be able to capture a lot of that market.
Love it. So to recap, I'll give you guys one word, because that definitely wasn't one word. Yeah. Make Bitcoin great again, make consumer great again, make usability great again, and make yields great again. Thanks, guys, for listening.
Thank you.